Good morning, everyone. It's Stephen Whiteside here from theuptrend.com with your morning market outlook for Tuesday, January 7th, 2025. In the pre-market this morning, stock index futures and commodities and Bitcoin are trading above fair value. So far, it looks like we're going to see some buying at the open on Tuesday morning. Now, we only have one number coming out in the pre-market this morning, and that's international trade at 8:30. That could change the direction of the market. Then the JOLTS report and ISM coming out at 10 a.m. Those aren't as significant, but of course, any number could potentially move the market. Now, the fear index is still on a sell signal. That's supportive for higher stock prices. Things would change on Tuesday if the VIX were to close above 1865. Now, Monday was all about the chip sector. We've got the Consumer Electronics Show this week and a lot of announcements coming out. Everybody's focused on NVIDIA. NVIDIA gapped higher yesterday, hit the next price target of 150. So if you had a sell order in up there, or if you had, if you've got some call options, congratulations, we hit 150. We did not take out the previous high just yet. So you can see 156.25 and 162.50 are the next targets to the upside for NVIDIA. Now, NVIDIA was not the best performing chip stock yesterday. It was the top performer on the Dow, but on the NASDAQ and the S&P 500, it was Micron was the big winner yesterday. Micron has been very sloppy over the past few months. There is Micron gapping higher yesterday, almost filling the open gap. If we look at our price targets, you can see we ran up and hit 100 yesterday and stopped on a dime. Our next target is 112.50. Now, if you look at the flypaper channel for Micron, you can see that it's pretty ugly at the moment. So that is not a stock I would chase at this time. We're still in the same range we've been in for the past few months. You can see in late September, we ran up and we haven't been able to take out that high since then. And so this stock is not something I would focus on, even though it had a great day on Monday. Now, when we look at the ETFs and we keep track of all the major North American ETFs, so yesterday the top performing ETFs were actually the semiconductors, and then we had the Magnificent Seven ETF back on a buy signal as of Monday's close. Now, what didn't work yesterday? Well, Canadian gold stocks were the biggest losers. We haven't generated a sell signal just yet, but getting pretty close to it. We got down to the lower channel line, but did not close below it on Monday. Then Marijuana Life, the Canadian marijuana ETF, was the next biggest loser. And then it was U.S. real estate stocks. So that's the bottom of the list from Monday's trading action. Now, we talked about Bitcoin in the pre-market yesterday. It is back on a buy signal, so all the bull ETFs for Bitcoin are also back on buy signals, and the bear ETFs, unfortunately, are back on sell signals. So we had a couple of weeks of some downward pressure, but the pros didn't give up control, and so here we are back being long Bitcoin. Now, we talked about the bond market yesterday, and things continued. We saw the yield on the 30-year bond continue to move higher. The TLT made a new low for this move on Monday, but looking at some of the other bonds, the XBB traded on the TSX, nowhere near a new low at the moment. We still have a little love for emerging markets, not enough to give us a buy signal just yet, but we are seeing money go back into the junk bond market. So there is certainly a risk-on opportunity in the junk bond sector, and that, of course, is good for the stock market. Now, moving on to the major index ETFs, starting off with the iShares for the TSX 60. We had a small pullback yesterday. We had CAE roll over back on a sell signal. We've got WSP back on a sell signal, and Constellation Software had a wild day yesterday, traded up to the 4,600 level and then came all the way down, closing at a new low for this particular move for Constellation Software. Looking at the Dow Diamonds, we closed near the low of the day yesterday, so we ran up to the upper channel line and came down on the day. We have the S&P 500 trading through the upper channel line, but not closing above it. So on Tuesday, we're looking for a close above $596.32 to give us a buy signal. Now look at that chart and then look at the equal weighted S&P 500. Just like the Dow, we traded up to the upper channel line and then pulled back, closing near the low of the day. So a different picture when you take out those big cap tech stocks. And of course, those big cap tech stocks put the NASDAQ 100 back on a buy signal, the equal weighted NASDAQ back on a buy signal, and the next generation NASDAQ back on a buy signal. So a lot of interest in technology stocks on Monday. That led the market higher. The Russell 2000 traded through the upper channel line before closing near the low of the day. Similar situation for small caps. Micro caps did the same thing, but are still on a buy signal, so no change there. Looking at U.S. financials, still on a sell signal. Again, we traded up to the upper channel line. We did that for banks and still did not close above the upper channel line. And that's also true for the regional banks. Looking at broker dealers, we're sitting right on the edge of a new daily buy signal on Tuesday. We closed at 146.40. We need to close above 146.52 to give us a buy signal. And then no joy for the insurance sector. It closed at the low of the day yesterday. So looking to see if we can hold those lows from mid-December. What didn't work yesterday? Well, consumer staples made a new low for this move, breaking down below that December support. Then looking at the Canadian market, financials still on a sell signal here. We just need a slightly higher close to give us a buy signal on Tuesday. That's also true for Canadian banks. Then looking at the energy sector, we almost hit our next price target yesterday before reversing. So if you had an order in up there, the high of the day was 1792. So I'm not sure how many people got orders filled up at that level. If you did, let me know, but we'll give that another try on Tuesday. Then looking at the venture exchange, we talked about the 625 level being resistance once again. And here we are reversing from that. Got as high yesterday as 625.06 before pulling back. Let's finish off this morning's presentation with a quick tutorial, and we're going to look at Lucid. We were watching Lucid in November. It was trading sideways. It was near the top of the most active list on a daily basis. That's why we were watching it. I did not do any analysis and compare this stock to other stocks in its sector. It had been selling off for quite a while and was building a base. So then we were looking for a buy signal, which happened on December 6th. And December 6th was a Friday, so we had all weekend to contemplate a trading plan for Lucid. We're going to come in Monday morning, buy it at the open, and then place some orders. And so when we looked up at the Lucid at that time, our next price target was 273 and 313. So when you look two lines up, that's typically what a stock will move. People imagine we're going to hit a home run every time and, go right back up to the 430 level. That's not usually what happens. It can happen. A stock can certainly do whatever it wants, but statistically, the market moves one or two lines at a time. So what happened? Well, on December 9th, the stock opened at 238. And so if you bought in 1,000 shares at 238, and Lucid being one of the most actively traded stocks out there, it's going to get filled instantaneously because you placed it at the open. You didn't put any price constraints on that order. You could see, the bid and ask before the market opened. So you knew typically, about where it was going to open. So once you place your orders and you get confirmation that your orders are filled, so let's say that you bought 1,000 shares of Lucid at that time, you want to go right back in your broker's account and place a sell order for 50% of those shares. So 500 shares at 273, then 50% of the remainder of your position, which would be 250 shares at 313. Now, 313 is above $3. $3 could act as psychological resistance, but look at this example here. The top of the open gap was above 313. So if they're going to run up to fill the open gap, that's going to cover your 313 order. And then I would place another order at the 352 level for 50% of the remainder of my position, which would be 125 shares. So what happened? Well, on the first day, you hit 273. That was the high of the day. So congratulations. You got your first order filled. Now we're watching to see what happens next. And over the next month, we have run up and hit 313, filled the open gap, and we continue to move higher. And yesterday we punched through the 352 level before reversing and coming down and closing at 333. So you would have got your 352 order filled. So now you're sitting with 125 shares left. You can put an order in at 391 if you want. At the same time, you can just wait until you get kicked out of Lucid, and that would happen if we closed on Tuesday below $2.93. Now, if that doesn't happen on Tuesday, of course, that lower channel line is going to continue to move lower daily. Okay, folks, that is all for this morning's presentation. So far, stock index futures are continuing to trade above fair value, so it does look like we're going to see some buying at the open on Tuesday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.